Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to another show of Investment Matters. I'm your host Adnan Bazir, and in tonight's lineup we'll be looking at the investment market update with Abdul Rauf Hanslow. We'll then be going over to the investment analysis slot with Abdulaziz Davids, and then we'll continue our series on financial planning with Mohammed Jaffer from Bojaf Financial Services. So do stay tuned as Abdul Rauf will be taking us through the weekly market wrap. Shukran. Assalamu alaikum and welcome back to Investment Matters, as we'll be looking at the investment analysis discussion for tonight with Abdulaziz Davids. He is the head of research at Kagiso Asset Management. Assalamu alaikum, Abdul.
Wa alaikum salam wa rahmatullahi wa barakatuh, Adnan, and to our viewers as well.
Wa alaikum salam. In tonight's discussion, we'll probably be looking at a very, I wouldn't say debatable company, but the Mondi Group in terms of being listed on the JSE as well as London. We see that the Kagiso Islamic funds hold both in the balance and the Islamic equity as holdings in the Mondi stock, so to say. Why has this been so attractive and appealing to the Kagiso investment team?
Yes, shukran for that, Adnan. And as you rightly say, our Sharia funds have an interest in Mondi. Mondi is a unique company because it has a dual listed structure. There's a Mondi limited shares that are predominantly, they're listed in South Africa, and then the Mondi PLC shares that are also dual listed. They're listed here and also in London as well. And if you look at the combined valuation of the company, it's about just under 30 billion rand at the moment. And Mondi has an interesting history because Mondi started out with Anglo American as the parent company way back in 1967. So the company has been going for, 40 years almost.
40 years.
And the company has gone through significant transformation and restructuring over the years. So if you look at the old Mondi, it used to be a predominantly paper company. They had paper mills predominantly in South Africa, and obviously substantial paper interests, forests, for example, in South Africa. They then went to Europe. They bought extensively in Europe paper mills, etc. And the thing about Mondi was that even though it was sort of a company or a subsidiary of Anglo American, it actually operated fairly independently. So the management structures and the operational management has always been fairly independent from the rest of the Anglos group. Unfortunately, they also got bitten by the bug of sort of just making acquisitions in the past. So prior to listing in about 2007, what you found is that Mondi actually it had sort of legacy businesses in Europe, for example. A lot of paper mills, especially those developed markets in Central and Western Europe. And to their credit, they realized that a lot of those European businesses were in structural decline. So if you look at the traditional paper businesses, if you take, for example, you get coated paper, for example, that is typically paper that goes into magazines, the glossy papers for advertising, etc. Then you get the uncoated papers. So paper like your A4, I see you've got an A4 sheet next to you.
Yes.
So that's typically printed on, and you would have seen the Mondi paper that you could buy at the shops, for example. Those goes into the printers, etc. And what we've seen is that there's been a clear trend, sort of a structural difference between coated papers and uncoated papers. So uncoated paper, especially in emerging markets like Asia and other emerging markets, are still growing fairly healthily. Whereas the coated paper market, because of the proliferation of, and more recently, like your iPad that you've got the iPhones, tablets, all of those things, people are not, you've seen people consuming their magazines, for example, and a lot of the traditional printed matter now on sort of the digital platform, etc. So Mondi, to their credit, they got out of that market. They focused on emerging markets. And also to their credit, they've some of the realizations of selling off those assets in the Western Europe, for example, they've redeployed that capital and invested in paper mill, for example, in Poland, a place called Swichi. They've got extensive forests in Russia that they run as well. And all of that means that they're still insulated, they're still what we call vertically integrated. So they've got control over the forests, they make their own, they've got their paper mills, and they obviously produce their own papers as well.
I mean, We also believe that Mondi can invest or are invested in high energy sort of projects.
Yes.
I mean, maybe you just want to shed some light on that.
Yes, as part of the paper, the milling process, you typically, one of the issues is that it uses water, but it also generates water as well. So you've got steam generation, so the boilers that they use, etc. So as we know with electricity generation, you can use steam as well as a means of, as an input into the electricity generation process. So the first target for Mondi was to become self-sufficient in terms of water use. So at the moment, they don't consume a lot of water, and obviously with the steam that the boiler process generate, they can then use that to generate electricity as well. And with our ever increasing electricity prices in South Africa,
Yes.
that is a potentially lucrative area for them to obviously contribute electricity to the national grid. What we've also seen them do is do similar projects in some of the European or the Polish sort of operations that they have as well.
I mean, as an investment analyst, how do you take into account a company such as Mondi, looking at sustainability for factors like deforestation
Yes.
and water usage and power energy uses?
Yeah.
I mean, how do you take that into consideration?
Very good question. And obviously that is with our focus on sustainability, those what we call ESG factors, environmental, social and also governance practices, it becomes important because one of the things that we don't want to do is to invest in companies that just deforest and cut down trees and then destroy trees. Mondi has been at the forefront of sustainability. If you look at the South African forests, for example, there's obviously a huge component of replanting that takes place. They manage their forests very well. And I mean, the key thing with forests is that they are what we call biological assets.
Yes.
So it is an asset that you need to maintain. And for Mondi, that is obviously quite critical as well. Typically in Russia, for example, it takes quite a number of years for those trees to grow.
Yes.
So you've got a substantial program of obviously renewal and renewability to that as well. In contrast, I think one of the more exciting things about Mondi is that they recently bought a company called Nodinia. And Nodinia is involved in consumer packaging,
Yes.
so anything from your traditional packaging for fast-moving consumer goods to certain things like diapers, for example, where they produce parts of the diapers as well. And I think that is still a market that is high growth. It's very exciting. So to an extent, Mondi is not your traditional paper company. So there's a lot of, sometimes people make the mistake comparing Mondi to a Sappi. Sappi is much more focused on the coated wood-free market. And as we discussed, there is a market that we believe is in structural decline, whereas they're more exposed to the consumer packaging and also the uncoated wood-free paper market as well.
I mean, we see Mondi sort of coming up, or have a PE multiple of just over 18 with earnings of about 2.5 cents. I mean, do you still see value going forward in Mondi?
Yeah, the 2.5 is obviously in pound sterling terms.
Yes.
We see some significant value because, first of all, as I've said, the recent Nodinia acquisition, they still need to get a lot of the benefits of that acquisition. Also, Mondi has some debt, which as the cash flows grow, they'll de-gear the balance sheet, which will also enhance the earnings. But overall, we see organic growth, especially in the recent projects that they've announced. They're spending about 250 million pounds, and they're getting significant returns from those capital spend as well, which will enhance the earnings growth in the future as well.
Shukran for that, Abdul. Do stay tuned after the break. We'll be doing our financial planning series with Mohammed Shaffer. Shukran. Assalamu alaikum and welcome back to Investment Matters. We'll be continuing our series on financial planning with our guest in the studio, Mohammed Shaffer from Mojaf Financial Services, as well as Abdul Rauf Hanslow from Kagiso Asset Management. Assalamu alaikum.
Wa alaikum salam.
Wa alaikum salam. Last week we looked at education planning, and prior to that we looked at the various investment life cycles of an investor. And probably also a very core focus we can see from our Minister of Finance, as well as, I mean, just the general consensus within South Africa, how important retirement planning is for an investor. And maybe just looking at the various products that are on offer for investors out there, Mohammed.
Yeah, Adnan, unfortunately in South Africa we have the situation that less than 4% of people can retire at the age of 65, which is dismal. It just shows you that the lack of saving towards retirement, and unfortunately, most people will still have to, when they're in their 60s, still have to work. So yes, it is obviously a great concern to the Minister of Finance that people are not saving enough, particularly for their retirement, and hence the reason why they are actually giving more tax breaks for those people saving for retirement. And it's important here, Adnan, that people make use of these tax breaks. Now, there are a number of investment products that we can use for retirement, particularly those that are working. You look at the pension fund, the provident fund, and then you can top it up, those that are self-employed, or you can top up your savings from work with a retirement annuity. And then we look at, then we have what we call preservation funds. We'll touch on that. And then once you move into retirement, then you look at life annuities and living annuities. And we will discuss, in the previous programs we touched on it. But what we'll do is we'll go into more detail into those products. Now let's start off with the different pension saving vehicles that we have at work. Typically, you would have a pension fund or a provident fund. In fact, now recently what I've seen, a lot of the big companies, they would actually have a mixture of the two, where they will have a provident fund and a pension fund. They would, for argument's sake, have 60% into a pension fund and 40% into a provident fund. Now, let us maybe just explain the differences between the two as the legislation stands now. In fact, Pravin Gordhan again made mention of the fact that he would want to do away with the opportunity where investors can dig into the pension savings. Yeah. Now let's look at the pension fund. The difference between a pension fund and a provident fund. A pension fund, firstly, whatever you're contributing into the pension fund, up to a limit of, I think they've adjusted it now to 20%. Yes. You can then deduct that off your pensionable salary. At retirement or before retirement, if you move or you resign from that company, you have two options. The one option is to transfer the money to your new employer or to transfer it into a preservation fund. Sorry, you've got three options. The third option is that you, as legislation stands now, that you can have access to the funds. Now, noting what Pravin Gordhan has said, he's actually wanting to stop or block people from having access to the fund because it is pension money, and they want people to leave their money for retirement. Now, with a pension fund also, when you run the whole time period from the time you start up to retirement, which can be any time after the age of 55. Say, for instance, you are now 65 or 60 and you want to retire and you're still within the fund, you can now have excess up to 1/3 of the value of the fund, and the 2/3 must be transferred into either a living annuity or a life annuity. Yes. Now, the 1/3 that you've got access to, the capital that you've got access to, is taxed at different rates. The first 315,000 is tax-free. The following 315,000 is taxed at 18%. The next 315,000 is taxed at 27%, and thereafter at 36%. So those are the tax brackets. So you can see, depending on your tax situation, you can then play around with the amounts that you take from your pension fund. The provident fund on the other side. The provident fund, again, as legislation stands now, at retirement, or let's still deal with before retirement. Before retirement also, what you can do is if you resign from your company, you can transfer it to your new employer, yes, or you can transfer it into a preservation fund, or you can have access to the full fund or a portion thereof. At retirement, this is the main difference between a pension fund and a provident fund. At retirement fund and a provident fund, you can have access to the full amount. Obviously, the company's contribution will be taxed at that point in time. But as legislation stands now, you have access to the full amount, and that is what worries Pravin Gordhan. He's wanting to do away with that, because many a times you find, and I'm sure we can look around us,
Yes.
and you see that people, here they have $1 million or $1.5 million, they've never seen that kind of money, and a couple of months later on, the money is gone. So yes, it's important that that money, particularly if it's earmarked for pension, it should stay for pension.
I mean, you want to say something, Abdul?
Yes, I think the other important thing, Adnan, is also that we have to remember that the government gives us nothing for nothing.
Yes.
So here is a perfect opportunity to us, because yes, they are actually giving us something for nothing. In this actual state, what they're doing is, number one, they're safeguarding the country's capital by taking you off the social grant system at the end of the day. But also the benefit that you are getting prior retirement is a huge tax break.
Yeah.
And post-retirement, you're probably going to get more income than less than 1,500 Rand that you're currently pulling from the social grant. So there is benefit in it, and obviously nothing's for nothing according to SARS, but this is something for nothing.
I mean, just before we end off, just touching on retirement annuity, and I think there's probably a trend in RA, so to say, that for anyone that's not necessarily employed by an employer or that's self-employed, I mean, because you're basically using voluntary savings money towards this vehicle for retirement. I mean, what's the focus on that?
Yeah, you see, with the retirement annuity, in fact, it's a brilliant saving vehicle for self-employed, because firstly you get the tax benefit, whatever you're going to put into the retirement annuity. The beauty of a retirement annuity is that the fund itself, there's no tax, and then also you get your tax break. But I think we're running out of time, Adnan,
Yes.
and hopefully in the next program we can continue with retirement annuities.
Shukran Mohammed and Abdul Rauf. Do join us again next week as we'll continue our series on financial planning. Shukran. Assalamu alaikum wa rahmatullahi wa barakatuh.